Hey guys, so in this video, I want to talk about Apple and its stock split that's happening in the next few days. So for those who don't know, Apple just announced that it's going to do a 4-for-1 stock split. Given that today, while I'm making this video, the stock price of Apple is at 444.45. So what it basically means that for every one stock of Apple that you have, if you qualify during the record date, during the X date, your one stock becomes four. Please remember this though, every time there's a stock split, the value of the stock price also gets slashed based on the number of stocks that are given out. So the thing about that is it's not, if you try to picture it out, no, every time a stock split would happen, it's not that you get extra pieces, it's the same pizza. If you have one pizza, it gets divided into four, so something like that. It's just the same pizza, but you just get four different smaller pieces. Or when you look at it this way, $1, instead of getting $1 now one piece, you're getting four pieces of 25 cents in one go. So that's what a stock split generally is. So please remember this, and I want to share this to all of you before we go into the charts. No, that whenever a stock split happens, it doesn't really fundamentally change what the company is. It doesn't really uh, puts it doesn't really make any difference on how the company earns, how it gives its dividends. It doesn't also give you any additional value. Even also when companies give out stock dividends, it doesn't really give you that much in return. It's just a form of them. In my opinion, what it does is, if you are a stock investor, it makes it more affordable for a broad range of investors to buy it. Meaning, if you look at the stock price right now, it's around 444 US dollars per share. Not a lot of people have the ability to have 444. So just for you to buy one share, it's already 444 in Philippine pesos. That's roughly close to 22,500 pesos. And for you to be able to buy 100 shares, you have to multiply that by 100, then it becomes a much larger amount. So one of the reasons why they're doing this is they want it to be cheaper. They want it to be more affordable for people as well. Dividend yield as of this time is at 0.74%. I'd like to point this out to a lot of people though, that uh, I think this was a very, very important thing a couple of years ago, more than a decade ago. But I'm sure you've heard about fractional shares. I've posted so many videos about it on my first channel, where we talked about in eToro you don't need to actually buy the whole stock, meaning you could buy Apple shares for $50 only. So I think that's one of the underlying differences right now, that I don't see the specific need for them to be able to lower the price for more retail investors to buy it, because again, there's more platforms right now, more brokerages that would allow you to buy fractional shares of the stock. So I don't really know what the underlying reason is for this, but what I do know is it doesn't change the fundamentals of the company. Apple, at the end of the day, in my opinion, is still one of the best tech companies in the world. Not just that, they're one of the best tech companies in the world. Have they have an amazing brand. And if there's one thing that I know in business, in products, brand is everything. The better your brand is, the more people will buy you. The better your brand is, the more people will come to you. And the better your brand is, people at the end of the day are willing to buy something that has brand, even if it's at a higher price. And here's what's interesting: Apple's quarter end for June 30 was up 10.92%, and it's at 59.68 billion US dollars. The revenue for 2019 was 260 billion US dollars. For 2018, it was 265. So please take note of this. There was a decline from 2018 to 2019. It was a 2% decline. I think one of the primary reasons for that was the trade war. As you all know, a lot of the phones devices that are made by Apple comes from China, and the trade war pretty much hit them right smack in the middle of it. So 2017 revenue was 229 billion US dollars. So if you look at it, with the exception of 2019, Apple has massively grown since 2007. And if you remember, 2008 was the first time they launched their iPhone in the midst of the recession. And I want to run this. I just want to run this through to all of you. 2007, 24.5 billion. 2008, 37.5 billion. 2009, 42.9 billion. 2010, 65 billion. 2011, then there's the jump when they started. I think this was where the iPhone 5 came in, 108 billion US dollars. 2012, 156 billion. To 13, 170. To 14, 182. To 2015, 233 billion US dollars. To 16, it dropped to 215 billion US dollars. To 17, 229 billion US dollars. Then 200 to 2018, 265 billion US dollars. Then to 2019, 260 billion US dollars. They're a very, very good source also of, since they have a lot of cash. Dividend yields right now, though, it's not as high anymore because the stock price has gone up. But I really believe they're a very, very good source still of dividends, and they're a company that knows how to innovate. And I think what's so interesting about Apple is their cloud-based services. Apple Pay will also be interesting uh, because of everything that the coronavirus is doing, that they're pushing everyone to do contactless payments. It's going to push everyone to do a lot of digital payments and transactions, which Apple Pay is right smack in the middle of it. So just to go back to everything that we've been talking about before I bring you to the charts, I'd like to point this out, that the stock split does not change the fundamentals of the company. It gives you more shares, but the value of those shares will be split, will also be lower, because it does not really give you more. It just makes it look that you have more, but the value and the prices will also go lower. So comment below if you're learning. Comment if this is something that's helping you and adding tremendous value to you. If you're new to this and you've seen this channel for the first time, my name's Marvin Germo. This is my second channel where I do more raw videos here, just me talking, sharing my analysis, my thoughts, my insights, and showing you also the charts for what it truly is. Because at the end of the day, I really believe that technical analysis coupled with fundamentals, if you know what you're getting into, is the game, and it will allow you to not just trade the markets with conviction, but it allows you to build a strategy based on your risk and based on the capital that you have as well. So if you want more of this, subscribe, like, and smash the bell. And if you want to know more about the markets, I have over 1,600 videos in my original channel called Marvin Germo. And if you'd like to know more, put the link in the description as well. Now, let's go through the charts and let's try to analyze this. So if you try to look at Apple stock, it's similar to the video that I posted for Microsoft. It's massively in an uptrend still. If you also follow the 200-day moving average, it's still also bullish from the 200-day moving average. You compare it with my post in Microsoft, both of them are massively, massively doing well. From the breakout from the 200-day moving average, which, please remember, this was just June last year. It's up from that point, from that breakout, over 147%. If you base it from here, the breakout from the 200-day moving average, from the drop that we had last March this year, it's also up more, close to 85% from that particular point in time. So those buy signals would have been a good area for people to start to position. And as of this point in time, it's still moving massively into its uptrend. And if I'll try to place some sort of a breakout signal here, please remember, before this coronavirus pandemic happened, majority of the stocks in the US markets were at all-time highs. And the all-time high for Apple at that point in time was around the 323 US dollar level. Then it started to correct because of all of the news about the pandemic. It bounced off the 200-day moving average. After that, it now started to continue and make its own uptrend still. Please remember this breakage here, the downward move. Still, you see the 200-day moving average still bullish, so it's still confirming whatever trend that we're actually seeing here. So as of this point in time, for those who are position traders, for those who bought also from the breakout of this level, as long as this level holds, the name of the game is for you to just deploy patience and just hold. I really believe that Apple will continue to push higher as long as they continue. If you look at it this way, of course, we don't know how the volatility will be. There could be quarters where their earnings could disappoint, where you could see it possibly correct. But Apple, unless they change something in its DNA on the way they innovate on their brand, on their quality, and the value that people perceive them to, I think they're still a very, very good company that has performed through the years. And if you analyze it also, Apple is one of Warren Buffett's biggest positions right now. Uh, so just to close this, Apple currently, the previous resistance at 326 is currently its new support. And if I try to put another support level here, a shorter one, I'd place it somewhere around here. So just to reiterate, the uptrend for Apple is still pretty much intact. Next resistance, the turn support is around the 393 level. The uptrend is still pretty much there. Splitting the stock really doesn't change the value of the company. The company is fundamentally sound, that gives dividends, that could be passive income for you for life, and that has a good brand, a good business model, is fundamentally intact as well. So trend is up, no reversal signal as of this point in time. It does not, whatever the stock split would do won't change any uh semblance of how good the fundamentals are. So that's it for now. I hope you guys learned a lot from this. I hope this is something that was also insightful to all of you, and I hope that it gave you as much value as possible, and it's something that will bring you closer and closer to your dreams of financial freedom. And I really believe that the stock market is one of the best ways for you to become financially free. I really believe that the stock market, if it's done properly, can help you grow your wealth over a stretched period of time. If you're a Filipino or wherever you are and you want to know more about how you can have exposure to Apple, even if you're in the Philippines, link is in the description below on how you can open an account with eToro for 50 US dollars. You get to have you get to buy stocks of Apple, the fractional shares that I've mentioned, that you don't have to buy the exact stock of Apple, the 400 plus US dollars. And you can even buy Google, Amazon, Facebook, etc. All in the description below. So that's it for now. Marvin Germo, I hope this video helps you. Before that, if you have any question, if you have any stock requests that you want me to analyze, put them in the comment section. If you want me to talk about something in connection to this also, put them in the comment section, and I'm going to try to make more videos on top of that. And if you have anything else, anything I could help you with, comment section. You can slide a DM on my IG if you guys have any other questions as well. So I guess that's it. Links in the description for my books, online courses, etc. And I hope this video helps you trade well, trade strong, trade smart. See you all again soon, guys, and God bless you all.